Well, good morning, everyone. Welcome to a fresh new year in the markets, a fresh new year for trading a smaller account. To be honest, I don't remember exactly when I started teaching this class, but I'm thinking it was like 6 or 7 years ago. It is my absolute favorite class to teach, although I've taught pretty much everything that Schwab offers in their weekly webcast schedule. This one is near and dear to my heart. It is the class I created that I, as a client, would have wanted to attend. So anyway, I'm glad that you are all here to kick off the year. I see some new faces in the chat and lots of what I, refer to as the usual suspects, and I love you guys. So to Kay, who was the first one into the chat today, and Justice and Chris and Paul and Dom and Frank and Rocky and Kevin and Will and Marcus and Urban and Will and the rest of the gang, thank you all for being here. There's also someone who I haven't noticed in the chat before with a really cool handle. So I love some of these handles. We've got Mighty Mouse, my friends. We've got Shawnee, and the one that kind of tickled my fancy this morning, I'm just going back trying to find it, was Mimi Loves to Trade, I think is what it was. So, Happy New Year to each and every one of you. Today we are wiping the slate clean. So every year at the beginning of the year, we do a reset. We're going to reset today. We're going to set some goals for this year for our Trading a Smaller Account. And then we're going to do a quick review. Buckle up. I've got 6 different setups I'd love to cover with you today. There's no way we're going to get to all of them, given the other things that we have to discuss, but we're going to give it our best shot. So if you are not following Mike and I on X, we've got Mike Fairborn in the chat. He's a friend and fellow coach. You're going to want to do that. At Mike Fairborn CS is his handle. At Barb Armstrong CS is mine. In this class, we do a lot of trades. Some are stock trades, a lot are options trades. Know that options carry a high level of risk and aren't suitable for all investors. Know that we use the Paper Money platform on the Thinkorswim desktop. It looks like, smells like, feels like real money. So it's a brilliant place to learn and hone your skills before you consider trading a strategy in your live account. Know that there are some nuances and differences. One is that short options will never be assigned early in Paper Money. That can happen in a live account. Okay, so we're going to do a little bit of a market overview. We're going to do a bit of an account overview because we're going to reset our account, and we're going to do a little bit of goal setting before we get on to placing some new trades, because we're wiping our slate clean. And this wouldn't happen in your live account. You wouldn't just go, okay, it's January, I'm going to close out all my accounts, all of the positions I have, and start over. But in this class, this is what we do. Okay, so how did we do form the market? Well, if we look at the SPX over the last year and you say, well, what is that as a percentage? We can come here and say, show price as a percentage. And we can see, on the year, we were up about 17% on the S&P 500. On the NASDAQ, we were up, just shy of, we were up around 20. And how about the Russell, our small caps? That closed the year out up about 11%. And the Dow, we closed the year up about 13%. So to be up 37%, now I will say this about Paper Money, is that it's Paper Money. And we meet twice a week, Mondays and Fridays. I actually missed a lot this year because I was out for the Barb 2.0 project, having my knee replaced. And I also did a lot with the travel team this year. And that's not an excuse. We ended up with something that did very well due to benign neglect, if you will. While I was off on medical leave, having my knee replaced. But, if we look at, and so you might say, well, I don't really care what the benchmark is doing. I want to set a goal that I want to achieve in this portion of my portfolio. Now, if you have a larger portfolio, maybe $1 million or $500,000 or whatever, you might say, well, I'm going to take a small portion of it and actively trade it. And you might not want to do that at all, but what is your goal? And I met someone last year at an event in Chicago, and his goal was to earn $100,000. Now, he obviously must have had a larger account than the 25,000 that ours is going to be, but his goal was, to make 2,000 a week. And so could we say, well, we're going to reset our account, and how do we do that? We just come to any position. So we're going to come to, let's come up to one of our stock positions. So you can come to any position that you have. Oh, Intel is doing quite nice. This is when it's a little bittersweet. So we want to adjust the cash. Actually, we want to reset all the positions. So we're going to reset all the positions to 0 and say yes. And so all of these positions have gone away. So that's the first thing we're going to do. And then the second thing we're going to do is adjust the cash. And it will automatically adjust it when it resets everything to 100,000. And so we want to take 75,000 of that away. Something you wouldn't want to do in a live account, right? Enter a non-zero amount. This is a little persnickety sometimes, minus 75,000. Okay. So now we've got $25,000 in our account. And yeah, see, you just said, are you going to reset? Yes. So we're making it 25,000. And some people say, well, isn't that kind of modest? And other people would say, like, I wish I had 25,000 in my account. And wherever you are, like when we're doing example trades, if your account that you intend to trade is half that size, then you may want to make your position sizing half that size, et cetera, et cetera. So let's go back to our PowerPoint for just a hot second. And if you're new, first of all, if you've never been to a live event, it's how I got introduced to the world of trading. I am so jazzed still about this. And that was 2011, so 14 years ago, 14 and a half years ago now. Kevin Horner, Ben, and Rachel Dashel will all be in Dallas next weekend. So if you'd like to join them there, they've got a 2-day event. It would be a great way to kick off the new year. If you live on the West Coast, you may want to join Ben and I in Seattle, along with the travel team, January 30th and 31st. And from there, we're heading to Sacramento. If you go to schwab.com/coaching, you can see the schedule. The entire first quarter is there, most of the second quarter as well. Yes. Can you have more than one paper money account? I have 2 that are linked together on this. So yes, you can. Okay, so, but what I really wanted to bring up was that we've got this $25,000 account. Our max position size is 5,000. Now that's 20% of our entire account size. And you might say, like, are you nuts? No sane person would put 20% of their eggs in one basket, but we're doing this so that we have the opportunity to do a stock trade and buy $5,000 worth of stock, or a buy right covered call. So, and as the account grows, we don't necessarily change our position size because this is a more aggressive position size. If you had $1 million account or a $500,000 account, you may say that you don't want your max position size to be more than 5% of your account value. And our max risk per trade here, we're starting with 2%. And you might say 2%, like, again, that seems pretty high to me. And if you had $1 million account, I'd say you're right. That is really high. Sorry. Let me go back here. I'm spending a few more minutes on this just because it is the first class of the year. You might say if it was $1 million account or $500,000 or even $100,000 account, I don't want this to be more than 1% or half of 1% or a third of 1%. But you should pick something. You should have this defined. And then same with max position size. You know, although ours is 20%, we're focusing here on short to intermediate term time frame trades. We're looking to grow the account and I say ring the bell or take our profit or acknowledge our loss relatively quickly. And we're doing both bullish and bearish option trades trades on what the market is doing. But that is our focus in this class, and we do a lot of example trades. Okay, so you know, going back to this guy that I met in Chicago, who I love to use as an example, he wanted to earn his 100,000, and he had a particular strategy that he wanted to use: buy right covered calls. In our class, let's say we want to generate on average, let's say $100 a week in profit overall over the course of the year. And some weeks we may overachieve and some weeks underachieve, or maybe we set a more aggressive goal to earn 200 a week. That would mean our goal is to grow the account, 2 times 50 is, 100, is to grow the account by 10,000 over the course of the year. Okay. So, and we're going to use a number of bullish strategies if the market's bullish. So buying stock, long calls, short puts on occasion. We don't tend to do as many of those because we're tying up a lot of cash to do that. So we couldn't do a short put on a stock that was over $50 because it would tie up more than 5,000, and we're essentially risking 5,000. Buy right covered calls, short put verticals, and long call verticals. So we do a lot of spread trades or vertical trades, a lot of short-term directional trades. And then if the bears come to town, we might look at buying a put or at a long put vertical or a short call vertical. And we on occasion do more neutral strategies like iron condors, which I like to refer to as a credit spread sandwich. So Chris, you just asked about iron condors. So if something's busy going a whole lot of nowhere, that's a great time. Or if the market in general is going a whole lot of nowhere, these are some of the strategies we might use. Okay, so we've got $25,000. So if you just said, okay, I'm going to take $25,000, my goal, my great goal is to earn 200 a week, which would be a return of, so there are some differences. Yeah. So somebody's asking how to access the current coaching schedule. Mike will put a link into that, but you can go to that same place, schwab.com/coaching, and you can see the current coaching schedule there. You'll also want to subscribe to this channel in the bottom right corner if you haven't done that. And if you go to Trader Talks from Schwab Coaching, you'll see the what's upcoming for the day. Okay. Okay. So let's start. We've now got a blank slate, and let's look at Intel. And Intel, this is one that was kind of bittersweet having to close that out, right? Because, it's up nicely today. But here is a stock, and let's come back to our regular price. Whoops. So here is a stock that over the last year has done pretty darn well, hasn't it? It's gone from $17 to $38 a share. So it's, up over 100%. And NVIDIA has just, is doing business with Intel. Some could say, well, I see a diagonal resistance breakout. Others might say, well, when I look at this, I see this continuing to, we've got a series of higher highs and higher lows. It's continuing to uptrend. And what if we did a short-term trade? We've got earnings coming up on the 29th. This is one where, given we have 25,000 in cash, could we buy 100 shares and sell a covered call just above it with the goal of being called out? Sia is saying we could also buy a call, and we could do that also. And so we could do a couple of trades to compare. But if we said, okay, if we're going to do this buy right, we're looking to actually earth to barb. Let's come over here. Here's my, if we even sold the 40, it's at 39.36. We've got almost 100,000 contracts. This is traded 52 million contracts today alone. So we get paid $1.28. It would only, and you know, if we get called out, you know, we'd only be making about 60 cents. You know, or we could come out here to the 41 strike, 15,000 contracts. We'd make 94 cents, but then we'd make, you know, $1 something. And you know, what is the probability? A 32% probability of it being in the money come January 16th, according to this, and a 67% probability of at least it spending some time at or above 41. So if we look at this and we say, okay, we want to buy covered stock, what is the most we can make? Well, $2.50. Is that worth our while? Well, if we can make $2.50 and we're investing $38.50, and we only intend to be in this for 2 weeks, that's a potential return, were we called out, of 6.5%. And if our goal is to average, our big, hairy, audacious goal is to average $200 a week, that would meet our goal for a week. Now, we could end up losing money and in the hole and then having to overachieve somewhere else. So where might we put a stop? We might say, well, here was a current low here at 34.95. So I'm going to go 2% below that and put a stop at 34.25. So how much am I risking then if I create an opposite? Oh, sorry. Let's come back here. Single order, first trigger sequence. We have to make this under advanced order. Then we're going to come here and create an opposite order. And we're going to make this a market order. To exit if Intel goes below 34.25. And we're going to make this good till canceled. And I don't know why this is supposed to be a market order. I may have to reboot this. So this should become a market order. $34.25. Because it should allow me to change this to a stop. Okay, you know what? I'm going to delete this and we're going to put the order in and then go in and put in our exit. So we're buying covered stock because somehow it's not letting me put the order in the way I want. So we're in at 38.44. The most we can make is 250. And we're going to put this. So now it's not letting me. I'm going to have to restart. Oh, I can move this after we've entered our trade. So that's our first trade. Yeah, it said it was limit. Okay. So we've now filled, that order's been filled. So now we can come down here and we're going to move this to our buy right covered call group. And then we're going to put in an exit. Create a closing order to sell. Let's see if it'll let me change it to a market order, good till canceled. And then we bring up our conditional order. Yeah, somebody said I could have changed it here. And I didn't think of that. You guys are pretty clever. We're going to make this 34.25. So, and make sure it says less than, otherwise you'll get filled right away, and that would be kind of annoying, wouldn't it? So we want to sell this if it goes below 34.25. So we're going to put that in. Okay, so if we come back up to this, we paid $38.43. So our potential risk is about $400. So that would set us back a couple of weeks. But what we're looking to do is just manage our risk. Now, someone else said, buying a call, might be a way to go. So if we came out here, now we do have earnings on the 29th and we might want to be out prior to that. But if we're buying a call because of the time decay issue with calls, we might want to come out to February. And if we come out to February and we looked at this first, like the at the money strike, we have tons of volume here, a tight bid-ask spread, it's 3 cents apart. And this, we might make our goal on this a swing target. So if we're buying something with a swing target, we might say, okay, our swing target is $44. Our swing target is $44. And our exit is going to be half the price. If the value of the option goes down by 50%, we want out. So we come to the trade and we say, okay, now we're risking $300 here. So can we afford to do 2? No, because then we'd be risking 6. So like that's breaking our rules right out of the gate. So we're going to buy custom with an OCO bracket. And our target here is going to be a market based on the price of the stock. So we're going to make that, greater than, this goes up to 44. And we're going to look at this how often? Every day. Because what if it goes to 39.89 or 43.89 and then we get a hammer or a hanging man kind of candle and say, hey, it looks like this uptrend may be complete and it hasn't quite hit our target, but we might be up nicely. So good till canceled. And a stop loss, if this were to gap down, we're saying, hey, if this goes below $1.45, we want out. And it will trigger a market order to exit. But if it gapped down, we might, we could theoretically lose it all, because I know some of you might be thinking, hey, if we put in a stop at 50% and then we're only risking $1.45, like we could do 3 contracts, right? That would be risking $4.50, but you've got to plan. If you plan conservatively, yes, you may not make as much when it goes well, but then you're less likely to lose as much, when you have an extraordinary situation. So here we're buying a call because we're bullish, right? Right. We want to sell that call at a swing target. So this is a swing trade. It's a swing target. And this is a long call. And then we're going to compare it to the buy right covered call once we're out of both positions. So how much can we make? This is saying we can make an infinite amount. Now we put a cap on it. We've said, hey, if this stock goes to 44, get us out. And how much can we lose? We could lose $290. We could lose all of it. Yeah. Okay. So we've set that one up. Now, this is a swing target. Let's say it took us, I don't know, a week and a half to get there. How much might we make? If you're anybody curious? So if we make this this is our swing target. We'll show that on the right. So I thought this was the coolest thing that I'd ever seen when I first saw it. I am on the trade tab. And then I'm coming down and I'm choosing Theo Price and Mark. And the first thing you do, then this little box shows up. The first thing you do is hit reset. And then we're going to say, okay, it's currently trading at $39.28. If this goes up by $4 and say 75 cents, what would the price be? I'm just going to hit enter, 44.07. So that would trigger our exit. And what might this be worth? Now, this is if it happened today. So we're saying, well, it's not likely to happen today. We're going to go to January, and let's say it happened by, a week from Tuesday. What might this be worth? Well, $5.79. And that's just a guess. Like, it's an estimate. So if we said $5.79 and we subtract let's say we paid $2.90 for it, $289 is what we could make on that contract. And so if we look at that and say, well, would that meet our weekly goal? It might. Now, we could lose $290 on it. So, there's a yin and a yang with everything, right? And what we're trying to do is take advantage of the momentum of this stock and make a little without risking more than we're comfortable risking. Yeah, this gives us a ballpark. And on an average day, this stock moves from top to bottom about $1.64. We're looking for a move just over $4. So, could that happen in 3 or 4 days? Would that be extraordinary? No. Like, we just had here a move of $10 in 8 trading days. So is that possible? Here, we've just had a move of $4.76 in 6 trading days. So, but it could lollygag about and take some time to get there. Okay. Crystal ball, we don't have one. Okay. So if we're looking at swing trades, the financials have been looking interesting. Now, this one, we have earnings coming up on the 14th. So we might look to this and say, well, we'd like, to get in and out quickly on this and just make a little bit. Could we just get in with the goal of making a little bit? And could we just buy some shares and do a swing trade? And you're saying, well, this is $118 stock. We can't buy 100 shares. Well, nobody said you had to buy 100 shares. We could take our 5,000 divided by 118 a share. Say, yeah, we could buy 42 shares and put in a target of, say, 122. And then how much might we make? Well, $4 a share times 40 shares. So 4 times 42 shares. If this were successful, 168. Base hit. You're not flying to Aruba to drink something out of a coconut, but it's, a real gain. And for the size of our account, that would meet our target. So we're going for little wins. We're trying not to be greedy, right? So if we look at this and say, okay, now if this doesn't work out, when would we get out? If we say, well, okay, yesterday, Wednesday, this had a low of 116.37. So if we put our stop 3% below that, 37 times 0.97. So that's 112.87. And it's at 118. So we're risking $5 a share times 40 shares, 42 shares. So just over $200. Is that less than 500? Yes, it is. So would that meet our criteria? Yes, it would. So we're going to come to Citigroup. And again, could we do this with a call? Or could we do this with a long call vertical? We could. Yeah. So we're going to buy custom with an OCO bracket. We're buying the stock. We're not buying 100 shares. We're buying 42 shares. We're going to click our little firecracker, turn it into a paper clip. And then when I come over here and click anywhere, it will even up the quantities. And our target on this, what did I say it was? 122? It was $4. Just go back. Yeah, 122. Now you could make it 122.50. I mean, this is your example trade. You can make it whatever you want. And our stop is at 112.87. 112.87. Good till canceled. We've got our quantity. Confirm and send. So we want to, and some might say, well, I wouldn't place this trade because I'm risking more per share than I stand to gain. And so some might tighten up the stop, but then your probability of being stopped out goes up and of securing a loss. And we've all, had our petunias frosted on that when something like that happens and then it goes right back up again. So we're looking to make $4 and we're risking $5. And if you're not okay with that, then you might put a note in here. This is a swing target with a stock trade. So it's a short-term investment. We're looking just to make a little bit of money. Are we under our $5,000 position? We are. So when that fills, we'll have invested for a short term too. Now, let's look at another one with a slightly longer term perspective, but still, we're not looking to be in this forever. So Micron, has had an exceptional year. It's gone from a low of 61 up to today, it's hitting a new high at 310.47. And on an average day, this stock over the last 14 days has moved about $14.50 a share. And so if we wanted to put a target on this, and if we wanted to do a stock position, where might we even put the target? Well, this is where our friend, and if any of you follow James Boyd, he sometimes calls himself James Fibonacci Boyd. But, we could use a Fibonacci target and say, well, here was how far it moved with the last move. Let's put our target around 360. This is how much, like if we look at this as a little bull flag. Oh, actually, just a minute. I drew that incorrectly. We want to go from the recent top, which was here, down to here. Yeah, that makes more sense. So, oops. So, if our target is 341 and it's sitting at 307, that would be a nice gain. Now, we can't afford to buy that many shares of stock. Now, could we do this with a long call? We could, but if we did this with stock, which has the advantage of not suffering from the vagaries of time decay, so we're going to divide this by 308, current price, we could buy 16 shares. And if we looked at that and said, well, if this were successful and we made $30 a share, not trying to count our chickens before they hatch, if I took 16 times 30, well, it would be just over 30. Let's see exactly what it would be, and then we can come back. Oh, and let's see so our target's going to be 340. And we'll put our stop below yesterday or Wednesday's low by 3%. So our target exit on that, or our stop, will be at 275.65. And this doesn't mean that we're guaranteed to get out at that price. And I think you guys all know that, but just in case. So we're doing 16 shares. And then as soon as I click anywhere, it evens those quantities up. Our target, 340. And our exit, 275.65, based on 3% below the recent low. 275, oops, 275, 275.65. Okay, so at 275.65, 275.65 minus 307.72, we're risking $32 a share to potentially make $32 a share. So it's more of a one-to-one risk reward. And if you say, okay, well, what's $32 a share times 16? We risk making 512 or losing 512. Now, 512 in baseball terms, like that'd be a triple or a double. Bases loaded, you know, and if we lose it, well, we're not blowing up the account. But if it starts to move up and then pulls back and continues to move, can we move our stop up? Absolutely. So this we're going to put in our stock with a target. Okay. And this is a fib-based target. Just so if we go back and we're looking at this and going like, how did we pick that? We have a note in the system. And if you want to see how to see these notes, right here, here's our order. We can click on it and it'll show us, you know, what notes we've put in. We could also add the notes here on our monitor tab. So we could do that as well. Okay, so I want to show you guys a couple of additional things. So we've done 2 trades on Intel so far. We did a buy right covered call. We did a long call, and then we bought shares of C, and we put an order in to buy shares of Micron and Citigroup. So we've, you know, started anew with 4 new trades. I'm referring to like volume and bid-ask spreads and a number of other things. There's a reason that I do that. And if you come to Trader Talks from Schwab Coaching, I have created a little playlist of helpful things. I did post it in the chat before the class started. It is called the Trade Management Mini Sessions. So Sia is saying, like, would it not be cheaper to buy a call? Absolutely. But if it takes a while to get there, the problem with a call is if it hasn't moved in the time frame we're expecting, time decay starts eating our lunch, and that option could expire worth less or worth nothing. Where if the stock hasn't moved, the stock is still the same value and we haven't taken a loss. Yeah, so these minis, I teach getting started with technical analysis on Tuesdays, and I've created a bunch of like snack size bites of candlestick patterns. We've got 11 in the series so far. There will probably end up being 18 or 20. But what I wanted to show you was, here's an example buy right covered call plan. Here's an example long call plan with a 1 ATR target. I haven't done a swing trading plan yet, but it's on my list. We tend to do a lot of verticals in this class. And so these were the first 4 that I created because we trade so many of these in this class. And then if you're new to Thinkorswim, and some of these I need to start re-recording because they're dropping off, how to customize a watch list, how to customize the monitor tab, that one I need to re-record, but you can come down here and these are in this turquoise. Okay, So that's something that you can access. It's an additional resource. These classes, there's a separate playlist for trading a smaller account. And so you can certainly access that as well. And then if you come to schwab.com/coaching, the in-person events, these are free to attend, by the way. We have the coffee on in the morning. We provide breakfast and lunch. So you can see where we're going right out through the end of the first quarter. You know, in Atlanta, mid-March, and then Denver, Dallas, Boston, Chicago. I mean, we're all over the place. Okay. And then here's our schedule. So if you want to see what else is coming up today, here is Friday the 2nd. Next up, advanced charting with Cameron May, then condors, calendars, and butterflies with Brent Moores. And we're ending the day with Mr. Mike Fairborn, market and sector analysis. That's a great review of what's gone on in the week. So you'll want to check that out as well. So, and if there's a particular coach and you're saying like, hey, Mike, what else are you teaching, you know, coming up? Well, he does swing trading on Tuesdays, trading with ThinkScripts, and then market and sector analysis on Fridays. So, or you can sort by, you know, hey, I'm a beginner. Where are the beginner classes? You know, and there's a beginner class taught every day but today. So there we go. So guys, that's a wrap for today. Please hit the like button. It helps move this up in the trading algorithms so that more people can find this content. Please don't forget to subscribe to the channel if you haven't done that already. Follow Mike and I in the land of X, Barb Armstrong CS, and Mike Fairborn CS. Get out there and hug someone you love, guys. It's a new year and a new week in the markets, and I will see you Monday for trading a smaller account. Have a great weekend, everyone. Take care. Bye for now.